You should set these goals for yourself that are so much higher than you ever think you could ever achieve. And with that, you have milestones that you celebrate along the way so that you don't feel like you're failing because you're hitting these milestones that are achievable, but you're keeping your goals really, really, really high. And so those are kind of the components of what I would do in terms of shifting your mindset.
Is risk a gamble, or is it the cornerstone of extraordinary business success? Emmy Sobieski, a wealth-building strategist and financial powerhouse who turned a $200 million trade into a career-defining moment, knows exactly what it takes to turn big ideas into massive success. With a track record of helping clients hit multi-million-dollar milestones, collaborating with billionaires, and mentoring underprivileged students, she's not just talking theory, she's lived it. Welcome to the DesignRush podcast. I'm your host, Kia Johnson. Today we dive deep into the strategies that fuel success, break barriers, and build empires. My guest, Emmy Sobieski, brings an unparalleled perspective on what it takes to turn ambition into action and risk into opportunity.
You can look at the wealthiest people in the world, Bill Gates, Elon Musk. You can look at them and you can look at the top billionaire venture capitalists, and they all follow the same framework. So there's definitely framework. And then there's also room for customizing because each person has their own unique path.
From breaking in, building equity, and breaking out, Emmy's powerful 3Bs framework to her groundbreaking strategies for embracing AI and navigating private markets, Emmy will challenge how you think about success, failure, and the bold moves required to thrive in today's rapidly evolving landscape.
Your milestone could be, hey, we grew 15% last year. We have more channel partners, or we have, more of these opportunities or less. And so, we're going to grow 10%. It doesn't have to be a higher growth rate, right? 10% or off a higher base, whatever. So you decide what you want to grow this year and then decide what you think the world looks like in 5 years.
If you're ready to learn how to build wealth, crush fear, and position your business or agency as a market leader, this episode will inspire you to take risks, innovate fearlessly, and think disruptively. Got a story worth sharing? Email us at spotlight@designrush.com. Don't forget to like and subscribe for more insights that will transform the way you grow your business. Let's get started. Emmy, thank you so much for joining me on the show today. I'm looking forward to unpacking some thoughts with you. But first, let us start with our rapid fire questions. Are you ready for me?
I'm ready, and thank you so much for having me here.
Your first question is, what is the key to wealth building? Would you say strategy, mindset, or timing?
Number one, strategy.
All right, question 2. If you had to pick one, trust your gut or analyze the data, what would it be?
Early in your career, analyze the data. Later in the career, trust your gut.
All right, third question, MegaWealth path. Born with it or built from scratch?
Built from scratch.
Okay, I've got the last one for you here. If you could only invest in one industry for the next 10 years, which would it be?
AI.
So now, Emmy, let's get stuck right into it, okay? In terms of your background, I must say your career is a testament to bold risk-taking. You've mentored underprivileged students to earn millions by age 30. You've worked alongside billionaires and you've helped friends achieve $100 million milestones. You've consistently built empires by trusting your instincts and taking decisive action. So what would you say has actually been the most cherished moment of your career so far?
So one would think that my most cherished, most fun moments were when I made a successful $200 million trade, but they're not. The most cherished moments for me are when I see my mentees exceed what I've ever done. When they make more money than I've ever made, when they're far more successful, when by age 29, I can't even understand what they're doing. When they describe their job and what they do day to day. And it's just makes me super proud, a little confused, but super proud.
And speaking to that, in terms of just mentoring and going through that whole process, do you have a customized approach where, each person is obviously,
because they are on a different path, that you would customize it to that? Or do you feel like there's a step-by-step that you do with everyone that you need to take? Can you take us through a little bit of that?
Yeah. So there's what I call, basically, there's frameworks that you can look at the wealthiest people in the world, Bill Gates, Elon Musk. You can look at them and you can look at the top billionaire venture capitalists, and they all follow the same framework. So there's definitely framework. And then there's also room for customizing because each person has their own unique path. And so typically I use two main frameworks. One is called the 3Bs, which is breaking in, building equity, and breaking out. Breaking in is obviously, okay, you decide on an industry, you decide on a career path. Now you've got to break in and learn your skills. Once you've learned skills, you can start getting paid equity for part of your compensation. And then the breaking out, and that's kind of seeding your opportunity to have step function increases in your wealth as soon as you start building equity. And then breaking out is when you have a fully activated, what I call money flywheel of equity positions in multiple different kind of pockets. And so that money flywheel is what I call the Silicon Valley secret. And if you go into Silicon Valley, you'll run into people that are working in private markets, and they're building a company, and a couple of their friends are building other companies. So they're investing in a couple companies their friends are building. They're maybe advising a couple others that are a little, 10% behind them, and they're doing build, invest, advise. You go anywhere else in the world and people either have their jobs or they're running their agency, and that's it. And they don't think about their career in this build, invest, advise. And so the breaking out piece of the 3Bs, that last piece, is when in the building equity phase, you were, say, working for a startup or working at an agency where you're starting to build equity and you own the agency. So you're working and you're building a company. And then you're advising a couple of others and you're getting paid in cash plus equity. And you're also investing either as a scout for venture capital if you're working in a hot area, or you're just investing in interesting companies that you see or interesting companies that you're doing work with. And what happens is then your other investors may say, hey, there's this other company that needs advice, or your other advisors on your board of advisors might find your next build opportunity. Maybe you want to build multiple companies at once. And so each one feeds off each other, and it creates what I call a money flywheel, but it's also an opportunity flywheel. And so if we back up and just look at, let's say we look at a billionaire like Elon Musk, he's mostly a builder, but when he was thinking about buying Twitter, he was on the board of directors. So he dabbles in advising, but mostly he invests in his own businesses and builds his own businesses, but he also holds so much equity that he's build, invest. So you don't have to have all three components. Look at Bill Gurley, a very famous venture capitalist at Benchmark. He is on a lot of board of directors, and he is an investor, as a professional investor. So he's not a builder. He hasn't built companies. Look at Mark Andreessen at Andreessen Horowitz. He is an investor, but he started out building multiple companies with Horowitz, with his partner. And so with Ben Horowitz. And so he's done build, invest, advise, but he's moved from one to the other. One of my mentees that I started with when she was in college, she has moved back and forth between the areas. So she started at Coinbase building. While she was at Coinbase, they allowed her to also invest in other coins. Then she started a hedge fund, so she moved over to invest. But during that time, she was advising other projects. And now she discovered this company she was super passionate about. After 6 years of running her hedge fund, she closed it to new investors. And now she's fully immersed in building while still advising other companies. And so you can move around the build, invest, advise, but you're just building these equity stakes. And what this ends up doing is, in an environment in private markets, whether you're an agency owner or whether you're diving into tech startups, 90% of companies fail after 5 years, in the first 5 years. And so but when you're successful, the upside is massive, because you look at like all of the top richest people, they're all owners, right? They're all company owners. And so you don't want to take away the upside. And so the strategy that I espouse and these frameworks is a way to kind of seed multiple equity stakes in areas where you have a lot of knowledge, you've done the research, and there's huge upside. So it gives you all the upside without as much risk, because you diversify.
If I were to sort of take a step back and say, okay, I'm someone that wants to explore this, but I don't have a clue what to do. This would be something that you would teach from the base and then sort of move up. And as you gain the knowledge and the expertise, obviously you would then just grow with this knowledge base, and you would kind of hold my hand along the way until I'm in a position where I'm able to do it myself, right?
Yes, and I've written 3 books.
Yes.
So I've written MegaWealth, which is the structure I just described.
Yes.
And then MegaWealth Careers talks specifically about how to break into the careers that most lead to this structure, that lend themselves to this structure, such as startup founders, investors, advisors, venture capital, that kind of thing. And then MegaWealth Investing is how to learn the investing hat, like the investing skills of someone like me that's run the number 1 fund in the world, that was 25 years an institutional investor. Learn those skills and then apply them to your career. And so, first apply them to investments, then apply them to your career, and then apply them to private markets. And so those 3 books kind of give you everything you need to take yourself along that path. And then all I do in terms of coaching is, for select people that want to, I can help you customize, your plan and your plan of action. But everything to make your plan and to figure out how to do this is in my book. So I don't hold anything back.
Looking at like building empires and trusting instincts, can you share a specific moment when you trusted your gut to make a game-changing decision, one that others thought was like far too risky?
Yeah, and it's a really fun story. When I was an investor, people say, you can't tell with this semiconductor cycles. You just have to invest in these companies, and these are the chips like Nvidia, like Intel, that go into our computers, that go into the AI that we're using today. And so those are called semiconductors because it's semiconductive material, and they're built in huge plants. And so, like anything, like a paper plant, like a cement plant, when they are at full capacity, they are printing money. They're making so much money. But if they're under capacity, they're losing money. And so what happens is every 18 months, you run out of capacity. You're making as much chips as you can. You still have more demand. And so you have to build a new factory. And the moment you build a new factory, if you look at your average utilization, it goes way down because you have more capacity, right? So there are these cycles like that all the stocks, they'll really get high when there's lots of demand and no supply, and then the stocks will crater when more supply comes online. And so I had the reputation in Wall Street of being able to buy at the bottom of these cycles, buy the stocks at the bottom, sell at the top, buy at the bottom. And basically people say that can't be done, but I just did it over and over and over. And so I was hired by a hedge fund who said, my last analyst didn't get the semi-cycle right, but I can see that you've gotten it right a lot of times. So that's what I want you to do. Like, that is the one thing I'm hiring you to do, which I love that kind of clarity in a job. Because I can do a lot of other things there, but I know the reason he hired me. He hired me in November of 99. And in April, there was some kind of a pullback, and he said, is this the moment? Is this the moment? And I said, no, actually, we should buy here because we haven't hit the problem. And he really didn't like that idea, but he did it. And then in the middle of June, the stocks were going up 2% a day. Every day, these stocks were going up another 2%. And we had $1 billion in our semiconductor portfolio. And overnight, there were 5 different things that I looked for in terms of signals of froth, basically, in the industry. But they were 5 particular things. And normally at the top of a cycle, 2, maybe 3 would hit. And that was like, you got to sell now. In this 24-hour period, 5 of the 5 hit. And I got up the next morning And I said, look, we have got to sell every single one of these semiconductor stocks. I said, I know you like to sell the bad ones and keep the really well managed. I said, you can keep the well managed ones, but they're going to go down 80%. Like, it's all going down 80%. Like, keep what, if you have some pet that you want to keep that's going to go down 80%, fine. And so he took me really to my word. But imagine you're in such a bull market that these stocks are going up 2% a day. And I'm saying not only sell them, but bet they're going to go down. So we sold, in 2 weeks, we sold $1 billion of semiconductors, and then we shorted an additional billion for a $2 billion swing in 2 weeks. And it was very easy to do. Sometimes, like, if you're shorting and everyone else wants to short, it's very hard to borrow those shares, and they're expensive. Here it was like, people were like, you're nuts. It was like in The Big Short, the movie, right? They're like, sure, we'll lend you shares. You're crazy people.
Yeah.
And so he did it right away. Like, I told him, and I got on this bus. I was actually on a bus tour where we were visiting other companies, and my friend said, oh, how was your evening? And I said, oh, I woke up this morning and bet my career. And and the other, no, for sure. Because we were not that big of a fund, and so if my bet was wrong, I could have ended that fund, and I definitely would have ended my career. So I literally bet my career. And the other two analysts that were on the fund each called me screaming at me saying, you're ruining the fund. You're going to take the fund to zero. We spent 10 years building this fund, and your one trade is going to wreck everything. And I can't believe the owner is listening to you. And like all of this stuff, like everybody just said, you're crazy. And 2 weeks later, the number one semiconductor analyst in the world went out and downgraded the entire group. And he had to hire two bodyguards because he had so many death threats. I mean, who cares about your ratings on semiconductors? But apparently at the time, people really cared. And so he had to hire two bodyguards, and those stocks went down 80% as predicted. And my boss personally made more than $100 million off of that trade. But that was really one of those things where, it's like, well, like I said in the rapid fire, do the analysis and then trust your gut. And so that was one of those things where I had done the analysis on 10 cycles before. And so on this cycle, it was like, this seems totally crazy. The stocks are going up every day. Like, if I had done too much analysis, I might have gotten too chicken. And so I trusted so that was like, look, I've seen these cycles. I trust in my system. I've used this system. I've got to trust my gut here.
But like, even though you went through, like these 10 cycles, I'm sure there were moments of doubt. I mean, did you have any moments of doubt? Did you overcome it?
So what's funny is I trust my system so much that when I saw those triggers hit, I said this, because it's funny. So I had a conversation with George Soros, which I don't know if he's the guy that Billions was made, Billions was made after him, right? The lead character in Billions. And he was thinking about hiring me. And I told him about my system in semiconductors. And he said, there's no way that can work cycle after cycle, because people will just use computers and they'll just arbitrage around it. And the reason that it works, and that it works every single time, is because at those extremes in the markets, either at the bottom or the top, people's emotions take over. They don't believe in themselves, and so they won't make the correct trade. And so in terms of my own experience, like, I was like, I have to trust it's almost like a blind trust of my system that has worked 10 times, and these are the things. However, after the trade is on and the other people in the firm are saying, you're ruining this firm, and I was like, no, I'm sure. And then Jonathan Joseph, the semiconductor analyst, the number one, he downgraded the group. And I was like, oh, thank God, he believes what I believe. And he is 2 weeks after me. And then all these companies started reporting earnings. And at the time they didn't, well, actually now it's similar, where they'll report what they earned, but not their guidance. And they were beating numbers by huge amounts. And I literally felt like I wanted to just die and crawl under my desk. And I'm like, oh my God, this is going to be terrible. And then they would guide and they would be like, we don't see any demand at all. And I had a CFO talk to me and he's like, Emmy, like we have nothing on our books. We have no orders. Like everything has been wiped. And so it was a very fast reaction because we were in such oversupply, which is why I think all 5 of my signals hit, because it was like so overdone that kind of the downtrend happened really fast as well. So, but I had a week or two of just like every time I'd see a new earnings report, it's like, they tripled what people estimated. I'm like, oh my God. But then the next day the stock would be down 20% and I'd be like, whew. So it's, we're all human. So it's scary for sure.
Having a backup plan in case of a fallout, is this something that even though you're trusting your gut, you'd kind of like have that backup plan just in case, that you can cover yourself? Or is it just like, let's just do this 100% and there we go?
Well, like in that case, we sold $1 billion. We shorted another $1 billion. Yeah. There's no backup plan. If those shorts started going against us, we'd be like Melvin Capital with the whole GameStop thing. Like there's no backup plan. It's funny. So when I talk about building, like when we talked earlier about building that money flywheel and seeding multiple opportunities, like I believe in that type of diversification, but I don't really believe in backup plans because I think you start to think, well, I'm probably going to fail. And so then you don't try on plan A enough. And I had this with one of my mentees where his dad was a machinist at Boeing. And so, literally screwing in screws on an airplane, which, we need, obviously. But neither of his parents had graduated college. And so he said to me, look, I mean, Wall Street's a dream, but, I got to be realistic here. And so I'm thinking management consulting because there's more jobs. And he and we worked together. I had a stock picking course or kind of meeting or something like that. I would assign them different tickers and they would come back a week later with their stock picks or 2 weeks later with their stock picks. He was doing, as a freshman in college, he was doing the work of a 5-year hedge fund analyst. And so I said to him, and he also really wished that he was in an Ivy League and he had gotten dumped from Yale at the last minute because his knee got busted in a football game. So I said, number one, you should not have this huge chip on your shoulder about Ivy League at the age of 19. Like, you need to go fix that. And number two, you're so smart. I believe that if you just put 100% into your Wall Street dream and don't even think about management consulting, it will end you up with far more success than if you have this backup plan. And so he transferred to Cornell and got into Wall Street. And most of the people interviewing him when he was a junior in college said he was interviewing better and understood stocks and investing better than most MBA candidates they were interviewing.
So, Emmy, going into my next question, I'd love for you to explain how someone can build MegaWealth by like transitioning from a salary mindset to a wealth mindset. I mean, I'm not trying to put you on the spot here, but like, let's say I'm looking to transition to build my own wealth. What practical advice would you give me? You spoke about some things in the beginning of our conversation, but if you have anything additional to add, that would be superb.
Yeah. So the biggest thing, and you'll see this online, not just from me, is that young people don't take enough risk. And I believe that they don't bet on themselves enough. And I believe that because I didn't bet on myself enough. I ran the number one fund in the world and I did not put any of my own money in it. I mean, the first 12 months, it was up 624%. And I did not have any of my money. And my boss had his money in it. He put $4 million in and he walked out with $24 million. So, and I didn't have 4 million to put in at the time because I was just starting out. So that's the biggest thing, is kind of bet on yourself and stand in your value. The other major thing, and you had talked about, before we started recording, like the challenge of like having these seasons where you work really hard and then avoiding burnout. And I'm actually, doing a talk, and I actually have a little, like a free mini course that I can send you the link to, which is and this is going to kind of tie into this, because I believe that when people look at burnout, they're looking at the symptoms and not the cause. And the symptom, and then they're trying to treat the symptoms. So the symptoms are overwork, being tired, being exhausted. But that's not actually the cause of burnout, in my opinion. My opinion, the cause of burnout is lack of personal power and lack of control in your environment, and specifically in your career. And so that's where I say, like, if you want to really avoid burnout in the long run, and I know this is a little off topic, but it's to build a career strategy and build something where you're more and more empowered. So back to betting on yourself and standing in your value. When you first do that, and then you set goals, that's a second thing that I disagree with a lot of people on. I believe that your goals should be moonshots. They should be so much higher, because we overestimate what we can do in the short term, like what you can do over the next week, but because of compounding, we underestimate what we can do in the long term. And because of that, you should set these goals for yourself that are so much higher than you ever think you could ever achieve. And with that, you have milestones that you celebrate along the way, so that you don't feel like you're failing because you're hitting these milestones that are achievable, but you're keeping your goals really, really, really high. And so those are kind of the components of what I would do in terms of shifting your mindset from salary to equity, is standing in your value, having huge moonshot goals and milestones along the way so that you can celebrate your success.
I do feel that you're touching on something when you're talking about burnout, and then you're speaking about moonshots, like actually reaching far higher. But isn't it fear that kind of like, fear's got a huge role to play in that? And it also kind of ties in with your backup plan that you spoke about as well. I feel that is almost like you're setting yourself up to fail. So and it's fear that's driving that. Do you think there are ways that we can, when we're in an organization and we're leading, and especially to our young entrepreneurs, that are just starting out, how do we overcome this fear?
Fear comes from imposter syndrome. It comes from thinking like, I can't do it. And yet, like, you're doing it. Every day you're getting out of bed and you're accomplishing something. And so that goes back to those milestones, right? You can have a huge goal, but if you just stare at this huge goal that is unachievable, of course you're just going to shrink in fear. But if you have set milestones that go along the way of, and they don't all have to, they're just building blocks. And so you don't have to know everyone and be able to say, okay, this is exactly how, like, JFK's whole speech created the idea of moonshots, right? Where he said, we're going to put a man on the moon. And they didn't have the technology. The people working for him had no idea how they were going to get people on the moon. And yet that actually spawned the biggest technological revolution in the United States had ever seen. When we created microwave ovens and, all of these exciting new technologies. So this is the same for your own career. And I would say even more for agencies these days, because what an agency is, and what when you're running an agency, you're running a company. This is your company. This is your equity. But what an agency is today, I don't know what it can become. And I don't think anybody does, because of AI and because of the influence AI is going to have. The agencies that figure that out and perhaps even transform part of their agency into software, right? And now they have a software company plus an agency, and then they change how their agency's interacting, and they change how social media is viewed. There's so much excitement and so much change here that in terms of an agency, you could have a massive moonshot. And then along the way, you have milestones like, make sure that I learn 10 new AI tools per week, because there's so many coming out, right? Which is what I'm doing personally. I have over 100 AI tools that I have a list of, and then I'm going through and learning 10 new ones every single week. And some of them I subscribe for a little bit to use them, and then I unsubscribe, and then the head of product contacts me, oh my God, why did you unsubscribe? And then I have a call with them and I learn more about it. So it's, it's just building out, like, what can I see is in the direction of the moonshot, and then building those milestones. And fear goes away when you sit there and you stack accomplishments, right? And you say, yes, I learned 10 new things. Yes, I built this video. And it goes away even more when you start reading reviews of these products and you're like, I know these products better than the reviewers know these products, right? Because my process is working. My goal, all of these milestones are being met. And all of a sudden, to hit the next milestone, you maybe have a little less fear. And I would say when you start feeling less fear and less imposter syndrome, then you need to push yourself more. And then you'll feel more fear because you're growing. Like imposter syndrome and fear, if you're taking action every day, then fear and imposter syndrome is a sign of growth.
You're talking about moonshots and milestones, and I'm kind of wondering, is this the way that, agency leaders that are trying to sort of cut through the noise and stand out, is this the way to go? I mean, this would be like a key mindset shift, that agency leaders can actually adopt if they're trying to move their businesses from like surviving to thriving, for example.
Yeah. And like, if you think about typical goals, you come into the new year and you're saying, I want to, and this is, I think with the moonshot versus milestones, we've got to think about the time period, because there was an agency owner that I worked for who was, I was thinking, okay, we could grow the business about 30% this next year. And so we put that in the numbers, and his response was, no, we're going to triple next year. Well, all of us in the trenches know that that's just not going to happen. I mean, you can just do the math. You know how many sales you need. You know how many salespeople you need. You know the lead times. It's not going to happen. So then we're all completely demotivated, right? He thought this like big grand vision would motivate us, and it actually just made us do. And so we shrunk. We didn't even not grow the 30%. We shrunk. So the thing for agency leaders is that your milestone could be, hey, we grew 15% last year. We have more channel partners, or we have, more of these opportunities, or less. And so, we're going to grow 10%. It doesn't have to be a higher growth rate, right? 10% or off a higher base, whatever. So you decide what you want to grow this year. And then you decide what you think and decide what you think the world looks like in 5 years. 5 years is almost impossible right now in terms of agency owning and marketing, social media, and AI. Like, it's pretty hard to figure out. But you step back and you decide what the world would look like in 5 years. And you see what your part is going to be in that world in 5 years. And then your milestones become your 15 or your 20% growth this year, plus all of the actions you're going to take this year that will be the foundation to reach where you want to reach in 5 years.
So it's almost like in phases, it's like it is a step by step, and you'd almost do it in this phase. You'd have sort of your overall, big banner goal, and then you'd have, like you said, these little milestones in between, which I think it's the best way to approach it that way. I feel that when you have a base like that, especially the way you're describing it now, it helps you when things shift in a way that you can't control as well, because you've already got that base and you're working with that. So you can kind of like adjust, take a step back and then just, get back into it again.
But the one thing that I want to clarify is that if every year you're saying, okay, we want to grow 20% more than the last year, that's not enough. That's not enough of a milestone. It's too incremental. And so I'm saying your milestones are this combination of like your growth trajectory for your current business this year, plus a bunch of learnings and things that you're going to build into the business this year that you don't know where they'll lead. Right. And those are the things that create the microwave oven, that create these things that the man on the moon speech created. Right. And so you kind of have to have both. And so it's like you have these business milestones of, did we grow? Did we get did we get enough new salespeople in? Did we do those? And then you have your learning milestones that can lead to your business being much more than a 20% grower year in and year out.
You've also had the unique opportunity to actually work closely with 4 billionaires over the course of a decade. So I just want to pick your brain on this one. I mean, you were up close and personal. So I'm sure among all of them, like one or two stood out for you. So who would you say taught you something new from their approach to wealth and opportunity?
So I'm going to pick two because they're polar opposites. And one of them was the boss that ran the hedge fund, where I made that huge bet and made him more than 100 million on that one trade. Personally, he made. And we were walking around. I still can see it. Maybe it's my photographic memory, but we were walking around Southern California, visiting companies. We're walking into Broadcom, which is a very famous company still today. And we're going up the elevator, and he's like, "This is just the greatest job on earth." And I said, "Yeah, I love it. I love it." I said, "I love it so much I would do it for free." He goes, "Emmy," he goes, "Somebody is going to make really big money. Somebody in the world is going to make, why not us? Why not us?" And I think that's such a great thing. It's like we all look at people like Bill Gates or whatnot, and we think, well, that's them and this. But like somebody's got to do it. And some of the people that I've seen make big money. Now, he was a very smart man and is a very smart man. But some of the people that I've seen make big money are not even average intelligence. So it's really what he said. Like, it might as well be us. Like, don't self-sabotage yourself out of those opportunities to make big money. The wisdom that he gave was, you've got to know what phase in life and what the purpose is. And so he thinks it's crazy that there are still people he was working with that are still on Wall Street going into the office every day, and they're 75 years old. He currently is a farmer. Literally, he sells alfalfa. He's like, that job and that career had a purpose, and I made my money, and I'm good. And the other side of the spectrum, so it's kind of understanding, like, that job was not his identity. He has a separate identity as a human being. He was very successful. He was viewed as one of the smartest of the smart money on Wall Street, but that's everyone else's opinion of him. That's not who he is, and he knows that. He really knows himself. The other side of the coin was, pun intended, was I worked for a crypto CEO. And he really brought his ego into the entire thing. And he bet the working capital of the company that Bitcoin would go to $100,000 within a certain time frame. And it promptly went, at that time it was 67,000, it promptly went from 67,000 to 15,000. And he had a company with 120 employees and let's call it 300 million in revenue, growing like a weed, and it was still growing, and it bankrupted the company, that one bet. And so, and this is like these silly sayings that they say where they say, so he like round tripped it, right? He was a billionaire and then is not a billionaire. Because he got to, he got his ego so invested in being smart on things, it's like, go home with the person that you went to the dance with. So he made all of his money building out these crypto ATMs, basically all around the country, where you can invest in your first crypto and you can kind of do it in a real easy way at like a 7-Eleven or something like that. And so that was where they made the money, was doing that, not trading and not speculating on Bitcoin price. But then he was basically kind of doubling down. The company still needed its working capital, but he doubled down and really wanted to see himself as this brilliant investor, but that's not where he came from. And even if I take like Stevie Cohen, he made all of his money by trading tiny little stocks, right? Like in and out, and he would have 4,000 positions, and he would just take these little bets, and he would be long semiconductors in the morning and short by noon, and then long again in the afternoon. Just trading in and out. And then he felt like, okay, I'm not the smart money. Like my boss was considered the smart money. Julian Robinson was considered the smart money. All these other, these 4 or 5 guys on Wall Street were the smart money, and Stevie Cohen isn't. But Stevie Cohen had made like $4 billion. Julian Robertson had made $1.8 billion. My boss somewhere in the middle. So like he was the richest guy, but his ego was angry that he wasn't considered the smart money. Like I would ask you like, okay, but he made the most. So why is he not the smart money? But so he went and changed his trading strategy and went and he tried to hire me because I worked for one of the smart money guys. He tried to hire the guys at Pequot. Like he tried to hire all these smart money people. And it lasted a total of like 2 months. Because basically what we were doing is taking large positions and holding them, and he just couldn't handle it, right? Like that was so against him. And so he didn't go home with the person he went to the dance with, right? And so that's the thing that I see. And of course he's a quicker trader. So he just fired everybody that he just hired and went back to doing what he does. And he's very successful. But the crypto CEO, was younger and kind of got himself so ingrained in this one bet that he was making. And unlike me, when I made that one bet in semiconductors, I had years of experience and all of these cycles to go back on. He was moving from being an operator and building a business to being an investor and wanting to be, thought of as smart in that. And so he just dug himself into this position that he couldn't get out of. And it resulted in the entire company going bankrupt.
In terms of like risk and intuition, which kind of goes like hand in hand with the way the business world is now, it's very fast paced and all of that. I mean, I'm going to speak to you about an example. Former CEO of PepsiCo, Indra Nooyi, she led the company through like a massive transformation, right, between 2006 and 2018, and shifted from like soda and snacks to like a wider range rather of healthier products. So she made bold moves. She acquired brands such as Tropicana and Quaker. I mean, many people in the industry were skeptical. So with that in mind, my question to you is, how can business or agency leaders now balance, right, risk with their intuition, especially when the stakes are high? So it's kind of like we're leading right into that with what you just spoke of.
So, and this goes back to one of the rapid fire questions.
Yeah.
Which is either if you're early in your career or you're early in a trend, analyze and then trust your gut. So you're going to reduce risk by doing some more analysis and figuring things out, and then trust your gut. One of the interesting things, I actually have a degree in nutrition as well. And one of the interesting things is actually your gut, and the barrier in your gut is the barrier between the self and the outside. Because if you think about it, like your food goes in or food goes in, and then when it crosses that barrier into, when it gets absorbed into your body, now it's like part of you. But the moment before, it wasn't part of you, right? And so that's actually our gut holds a lot of things. It holds a lot of emotion. Obviously it is our identity in many ways, because that is the barrier between the outside world and the inside world and what becomes us, right? And so what happens is, over years of doing analysis, like I was talking about with the semiconductor cycles, the amount of knowledge that is either buried in my brain that I can't even remember anymore, or that is stored in my gut in terms of like emotion and serotonin, et cetera, serotonin receptors, is so much bigger than the things that we're processing today in terms of analysis. And that is why, as you get older, as you have more experience, you want to do the analysis, but really rely on your gut. And that helps you kind of mitigate the risk, is first do the analysis, then listen to your gut. Now, right now, when we've got agency owners adopting AI and figuring out how they're going to fit in with AI, how they're going to leverage AI, how AI may completely transform their business, it is even though you're senior, even though like I've had 2 careers, one of my careers was 25 years. I mean, I'm senior as well. And I'm out there with a lot of like, youthful energy, I guess. But I'm out there every week on the phone with these product managers and AI companies and trying to figure out how to use these tools and trying to figure out how to create digital twins of my voice and digital twins of my video and all of these kind of things. And so I am acting as if I'm for AI, I'm at the beginning of my career. I don't know what that career is. And so that's where I would say for risk right now, act like you're earlier in your career than you would, and just spend the time getting to know these tools, spend more time in analysis, and it will mitigate the risk going forward.
I spoke to you now about the CEO of PepsiCo, and like when we look at like past leaders who made an impact. It's very easy for up and coming leaders to like stick to that same blueprint, for success and use those traditional formulas, like a fixed pattern or rule to actually grow their business. So I would like to know from you, how important do you think disruptive thinking is for brand leaders? And can you actually quickly help define what disruptive thinking means to you?
Absolutely. So to me, disruptive thinking means first principles thinking. And never has it been as important as it is today. And I hate to bang on the AI drum once again, but we've got to figure out as an agency owner, when the leaders in AI are saying there are going to be more AI agents than people on the planet. There are going to be billions of these things. And you're an agency owner. Are you going to be part of that process? Are you going to help people build these agents? Are you going to have these agents working for you? Like, how is that going to be? And if you don't, and so for me, disruptive thinking is purely first principles thinking, because when a disruption happens and you're not thinking in first principles and you're thinking about the way that it's always been done, you're going to get obliterated. If you think in first principles of how can we help our clients, how can we grow the business, how can we deliver more value, and how can AI maybe make us have 2 businesses? One is an agency business and one is a software as a service business that is helping other people spin up agencies using AI.
Do you maybe have an example of a brand that embraced this kind of approach and like really turned things around that you can think of, and that had like tangible results and numbers that came from like these bold decisions?
Yeah. Apple.
Yes.
And when I first started in the industry in 1996, and there's many of these, and there's some that survived and some that didn't. Digital equipment, for instance, had a chip that was faster than the Intel chip at the time, but they kept doing things the same way they always did things, and so they went bankrupt, right? And Apple was on the brink of bankruptcy, and Steve Jobs is very much a first principles thinker. He's a lot of other things, and like for instance, I flew out to visit with their CFO, and it's across the whole country. I was living in New York, and I flew out just for that. I finally got the meeting. I flew out for the meeting, and I was at Oppenheimer Fund, so we were managing $220 billion at the time, and the stuff that I had under my purview was about $6 billion, so it wasn't small. We're top 3 in the world or whatever, and in terms of size, right? Or top 3 in the country. I think, anyway, so I get there for this meeting, and I'm in the meeting like 10 minutes. I'm kind of asking some questions. We're getting to know each other, and the phone rings, and it's Steve, and he's like, I gotta go. And he just gets up and leaves. That was the end of my meeting. And so it's like this first principles thinking. If you're really in it, it's almost like this childlike thing where you think of something and then you've got to have a meeting right away, and it's hard to separate that and say I'm going to be this super professional person and be a first principles thinker. So it's like this childlike learning that you do all the time. but sometimes you can't have it on a schedule. So I would say like that's the biggest. Because their brand got too ingrained in, originally their brand was very much around that it's easier to do. They had Windows before Windows had Windows, right? They had all the drag and drop and everything like that. And I'm old enough to I got the first Macintosh that was out and all that kind of stuff. So I was leading, and then I was at the hedge fund when they were almost bankrupt, right? So, and so Steve did such a great job, and it was partly luck and partly him, in my opinion. He did such an incredible job of looking at the cell phone industry. I mean, we had hundreds of models, hundreds of different, who needs all that choice? That just freezes the customer. And so he just said, this is the best model. I've designed it for you. Here's the model. And now we pretty much have, 5 or 6 types of cell phones. We don't have so many. But what was really the thing, so, he's doing that. He's figuring this out. He's trying to get songs, on storage so that we can have songs. He's seeing Napster, right? And they weren't first at anything. This is the other thing, for agency owners, for business owners, you don't need to be first. Google was not first. There were 35 search companies before Google. Now, you can't be too late, right? But you don't have to be first. And so we had lots of MP3 players out. We had Napster. And so Steve, from a first principles standpoint, was solving for all of the theft of music. And he really was a lover of music himself, and figuring out how to get that, on an iPod with all the back-end agreements with all of the record labels, etc., right? But what happened was that the power of Apple moved from basically the equipment that they were selling to the iTunes store and to the App Store, right? And they gained all of this kind of monopoly power in those areas. And so that when it was in 2006 and I was at Oppenheimer Funds and I started to run the numbers, it was almost to infinity the types of profitability that the iPod was doing. And this is before the iPhone came out. And so it was mind blowing, but it wasn't because they were selling this really great, SD card packaged up really pretty. It was because of what they'd done on the back end. So, and that was partly first principles thinking and partly him solving those things. But I think even they were surprised at the amount of success. And once again, this is that goes back to the moonshot, right? You've got to create big enough moonshots for yourself that the range of successes can be wide and you can completely surprise yourself on the upside.
And sometimes a little bit of luck would help too.
Absolutely.
Definitely. Emmy, businesses today, need credible and reliable growth partners to help them realize success and achieve their long-term goals. Now, almost always the partners in these scenarios are agencies. So what top 3 critical qualities do you think businesses must prioritize when selecting an agency partner? So, of course, I'm going to go for some angle, but yes. In real estate, what do people tell you when selecting real estate? Location, 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 right? It's what are the 3 top things in real estate? Location, 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 right? And then my friends will say to me that are real estate brokers, they'll say, well, just have 3 things that you need, higher ceilings or whatever, that are kind of your things. But at the end of the day, it's location, location, location. And so for me, with having worked with a lot of agencies over the last 4 or 5 years, character, because things are going to go wrong. Yes.
And I've had things go wrong and agency owners just disappear. And I've had other things go wrong and an agency owner that barely knows me is hey, I've got a bunch of levers. I could loan you some money. I could do this or that. And I'm I don't even know this person that well. Right. And they're really acting like a human being. How do you know the character of the people that run it before you go there? And I think that is looking through their website, not at the testimonials that people give, but possibly for figuring out kind of under the cover who else has worked with them that maybe they're not highlighting, and try to talk to some other people, not just the ones that they give you, that have worked with that agency. And I think for me, that's the biggest thing, is character. And then you've got to figure out, is this the right mix? Nobody's perfect. Is it the right mix for you? And are they really the character that they say they are?
Emmy, my final question to you is, we want to kind of like take a look at 2025, in the next couple of years. Businesses and agency owners, are embracing trends. I mean, there's things like your personalized customer experiences. There's your diversified revenue streams, generative AI, automation, influencer community-based marketing. So what would you say out of these trends actually like excites you the most, and why would it be exciting you? Yeah.
Don't you already know that answer, right?
AI, right? AI.
It's AI. But here's something I will share, is that when we're looking at generative AI, it's like, even when you're talking to a person, listen to what they say, right? If someone tells you, hey, I'm probably not the person for you, or I'm not, sometimes when we're young, we're like, oh, we could make them into the person for us, right? And then when we get older, we're like, when you get older, you're like, oh yeah, I'll just listen to them. I'll trust what they're saying, right? And so Sam Altman was sharing, he's the CEO of OpenAI, and he was sharing that, and it's pretty obvious, right? They have tens of billions of dollars. Like, he's talking about needing $100 billion to build and run all of these data centers. And so the AI that I find exciting, and the AI that I would recommend building or using, is the AI that sits on top of a ChatGPT, a Google, a Claude, Anthropic, not one that competes with them. Because what he's basically saying is that let's say we're at ChatGPT 3.5, and then you're at 4, and then you're at 4.0, or what this weird thing is, right? The O1. So the next version, 5 or 4.5 or something like that, may obliterate. If you're just sitting on 3.5 and you build AI on 3.5 that does something new, like legal forms or something, or video. Let's say you do video. There's a bunch of video ones that I've been using, right? Well, now Google and OpenAI have come out with their own video. And so you just have to be really careful to kind of think about what is a very broad application that they may ingest and then provide that as the standard in the next generation. So you want to be, first of all, building on top of these LLMs, but not building something that is so broadly used that it will likely just become part of the next LLM. And you can even see that in Instagram, where they're going to start allowing you to use AI to make your videos straight on Instagram. So like the video producing companies that are doing video AI right now are basically getting like squeezed from both sides, right? From the general LLMs, and then from the social media platforms as well. So that's the thing, is I'm excited about AI. And I would also say it's not just generative AI. If we back up for a moment, and we think about like AI since 1950, which has been going since 1950, right? You will have an 8-year period where there's so much improvement in visioning. And then all of a sudden you have backup cameras in your car, and you have things that keep you in between the lanes. And then all of a sudden you have chess, and then you have the thing be able to play Go. And then all of a sudden, and you have a lot of natural language processing that it's called NLP. You've got a lot of that progress. And then all of a sudden you have ChatGPT, and you have these things that basically LLMs, large language models, they predict what the next letter is going to be. Right? It's a mathematical prediction engine that is just very, very good, and is run through a lot of languages to be able to predict what the next letter is going to be in the word. And then it looks like it's conversing with you. So I would also say that's the same thing that I gave the advice on, like looking what your next year is and then 5 years out. Because don't just think that now we're just going from one LLM like on this linear path to the next LLM to the next LLM, because we also have these leapfrog things happening where all of a sudden we get way better vision technology. And then all of a sudden, because there's a lot to being a human, and it's not just about guessing the next word. And so, if you're trying to create artificial intelligence, I don't know that we're trying to create humans, but if we're trying to create something that improves our ability to think and, adds to our life, it's not just guessing the next word. And so think more broadly than generative AI. But in general, think about, okay, if these big, huge guys that are the factories of this, like OpenAI, Anthropic, Google, you want to have something that, first of all, they probably don't want to make. So maybe like legal software analysis or something, or in the agency area, something in social media that you think is not going to get created at the back end, like at the end production, like by an Instagram, and also, is not so broad that it's going to get eaten up by those LLMs. And then that's the space you want to ride in.
In terms of like just generative AI and everything that you've just mentioned, how do you see it driving the most revenue for agency and business owners?
One of the things that I learned as a stock investor for all of my career was just like, turn on the TV and just pay attention to the world, right? And so you go on TV back in 07 or something like, or 06, you go on TV and everyone's got that freaking Motorola Razr flip phone, little pink one, right? Motorola started beating numbers. I mean, they had their last hurrah again, right? And then all of a sudden everyone's got the iPhone, right? And then that kind of takes off. And so right now, when I look at what people are talking about, and I'm on Instagram and I'm on TV and I'm listening to my friends, they, for some reason, they're not as enthused about getting 100 AI tools and learning them all. No. But what they want is something to sit on the phone for an hour and a half and get a hold of your healthcare insurer. I mean, I had a thing where I was trying to get a hold of my health insurance thing, and I was on hold for 8.5 hours. And, so something that could go on hold for you, right? It's just basically something that could be your assistant. And there's so much stupid, mind-numbing things that we do in any day. And so for me, for an agency, if an agency could create you could have all kinds of different agencies, right? But even an agency that has, say, virtual assistants, right? That I can sign up for a virtual assistant. I'm very reticent to do that right now because I'm like, well, how much could I just replace with AI? But if somebody was building AI agents that were personalized for me and keeping me at the kind of the cutting edge of AI, I think that that could be super interesting. But it's really looking at what are people's pain points, video production. So it's this combination of making me comfortable enough that I don't think that I'm signing up for last year's technology, right, at last year's prices. So figuring out how to make the agency model work so that you're passing on the savings that we get from using AI, you're passing some of that on, but that I get these kind of customized agents before I understand how to use them. So I think that would be, and then that's something that customized agents could also be for other agencies, like a way to take automation into a larger business. Just like how do you create the structure and then have those agents do that work? And you hear, I think I was reading the CEO of Klarna, he hasn't hired anybody for a year. And so his workforce has gone down by 20% and he's replaced everything with AI. And he's basically said to his employees, you're going to make more money being here because now there's more money to spread amongst you. And so he said, because of that, they're embracing AI and they're trying to figure out all the ways that they can be an AI because they realize if there's less people working here, there's more money to share. Now that doesn't work if you just have an agency owner that takes everything for themselves, right? You have to have kind of an environment that does that. But in that environment, the CEO is saying that all of his workforce is embracing AI, trying to figure out ways to use AI so that they can continue down the path of each individual making a little bit more money than they were.
Emmy, it was so great chatting with you. I mean, you were chatting about the moonshot, and then the milestones, and you spoke about analyzing, and then you spoke about character. I think those are like my takeaways here today. It's forever going to stick in my mind. I know it resonates with our audience as well. And it's definitely the knowledge, base that I think you're just so powerful in. So it was really great chatting with you. I had an amazing time, and I really appreciate your insights. Thank you so much for joining us on the show today.
Thank you so much for having me.
Bye.
Curious about what top brands look for when choosing an agency? Tune into our latest episodes where we reveal the decision-making secrets of leading brands. Subscribe to the DesignRush podcast and stay ahead of the competition.